Smart advice, cutting-edge data and exclusive industry inputs on what's hot and what's not in India's real estate. Welcome everyone, let's get started. Why is Maharashtra Housing and Area Development Authority, that's MHADA, losing its focus on affordable homes for Mumbaikars? Instead, building premium apartments. There has to be a reason. We'll get to the bottom of it. Then, of course, we'll go ahead and call out some best property options in Mumbai for you to buy. 1.5 crores is the budget. Pune, mid-segment homes at 45 lakhs. Chennai, 55 lakhs. Prime properties, Bangalore, 20 to 35 lakhs. What's hot? And Noida at 70 lakhs. What's worth your money? Gurgaon at 60 lakhs. So lots of cities lined up. Of course, these cities together constitute 70% of India's residential market. They always figure in our list of cities to cover. Mumbai now has acquired quite a reputation as an unforgiving realty market for buyers, with prices refusing to budge from high levels. Now it seems that the state housing body MHADA is also struggling to give the buyers right-priced homes. The question is, has MHADA lost its human touch? Or with the right intent, it can still meet its goal of providing affordable homes in the maximum city. Nikhil Sivdas joins us with this report.
In Mumbai, buying a home means that you either have to be a millionaire or be ready to move to the outskirts of the city. The only other option is the Maharashtra Housing and Area Development Authority, or MHADA, which has helped level the playing field by offering affordable housing options within the city. But the state housing body has recently become the target of much criticism.
MHADA has lost the focus and they have entered in the luxuries market where they want to compete with a developer. I feel very unhappy when government themselves don't want to create EWS, which is their job, and they are bringing this EWS reservation on a private developers like us.
Until about a couple of years ago, MHADA was the only option for home buyers to buy flats within the city suburbs under 40 lakh rupees. But since then, the prices of MHADA apartments have risen steadily. Last year, the costliest MHADA flat went for about 75 lakh rupees. This year's lottery has flats going for about 85 lakh rupees. Going by that trend, experts expect MHADA flats to cross the 1 crore mark next year.
Prices are rising, but not because of something else, because the cost of land, cost of construction material, and other things are rising. That's why it is rising. Otherwise, but compared to private developers, our rates are 40% less in any area, or somewhere it is 50% less.
While MHADA flats are cheaper than those of private developers, the pool of people who can afford to purchase even these flats dips every time the prices increase. For instance, the number of applications for MHADA flats fell from 1.05 lakh applications in 2012 to just about 76,000 in 2013, the last time prices were increased. Then there's MHADA's need to cross-subsidize flats for low-income sections by chasing profit margins of 15% for the mid-income group and 25% for the high-income group. Making matters worse is the tough environment the realty sector is currently facing.
The cost has gone up and the government has been increasing the ready reckoner prices, so they themselves are feeling the burnt of it.
Several politicians, including the current MHADA chairman, have promised to bring down prices if it gets too high. However, experts believe that the situation may be too much for MHADA to handle.
It is really difficult for MHADA because if they are required to bid like a private developer and compete while acquiring the land, I don't think that MHADA will be able to cut down the cost or the pricing.
The need to chase after profits while competing in a tough economic environment has put MHADA in a spot. The state agency is doing its best to provide low-cost housing, but a continued rise in prices may undermine MHADA's reputation as the guarantor for affordable housing in the city. From Mumbai, Nikhil Sivdas, NDTV.
We have with us today a special guest, Yusuf Abrahani, chairman of MHADA, who has recently taken over the tall task of providing affordable homes to Mumbaikars. Sir, thank you very much for joining us. I think the first question is that how has MHADA actually moved into the category of providing homes which can't now be called affordable or even mid-segment? Some of the reasons have been mentioned, but is it land, sir, the fact that you have to compete and bid for land against private developers?
No, the reason is that earlier we had a lot of land. The state government gave us a lot of land free of charges and at a very minimum rate in the year 71, 72, 73. So we had a huge land bank, but now the land bank is gone. So now suppose if you want to provide affordable housing, we have to purchase land from in the city. It is difficult in the city, but in other part of Maharashtra, we are purchasing land to provide affordable housing to the people. But still, we have got some different options also. We have amended the DC regulation, which is 33(5), under which we can develop MHADA society, and we can come in partnership with the private developers and increase the FSI of the plot and get half of the FSI for our affordable housing. That we are doing it, and we are getting a lot of proposal for that also.
Do you think that these partnerships with private developers will be successful? How successful has it been in the past? Because if I look at the track record,
we have got our own colonies. MHADA colonies are there. So now suppose if somebody comes to develop the MHADA colonies, we are asking for some FSI for ourselves. So suppose if he is getting 1.5, we will get half of the FSI, that is 0.75. So that is meant to provide affordable housing to the people.
okay.
So this way, because lands are not available in Bombay.
Fair enough.
And
I get
now
that point,
the
sir.
And rise in price is not because of land, it is because of material of the construction cost. And the second thing that I'll give you a simple example. A person who purchased a flat in 1975 at 35,000 rupees is getting 6 crore for the same flat, 6 crore rupees. So now see the difference, you know. The same thing happens here also. Today we are getting 1 lakh application, 1,000 applications per unit. So even today it is in demand, and it is 40-50% less than the market value.
Okay, that is a point that I wanted to ask you, sir. 40 to 50% less than the market value. Can you give us some examples? Take a micro market, any micro market of Mumbai, and tell us where is it 40 to 50% cheaper? Because developers are claiming that it's the same price.
I'll give you. You can check it also. 9,000 per square feet is at Powai, and Hiranandani next to our land there is Hiranandani project coming, but it's 25,000 rupees and 20,000 rupees. So it is more than 50%. And our is the carpet area. They give super built up area.
All right.
So there is a huge difference.
Are you saying that within the Mumbai city limits and suburbs of Mumbai, it is not possible at all now to provide homes in the 50 lakh bracket? Is that correct, sir?
It can be less than that also, because now today our EWS is nearly 16-17 lakhs rupees, which is 25 square feet. It is hardly 16 lakh rupees. Our MIG is 30-35 lakhs rupees. Okay. So it is possible, but
then sir, why get into an area of offering flats at 85 lakh rupees? Why get into the premium development category, sir?
See the price, you see the price, you don't see the area also. It is area is 1300 square feet. The area of 79 lakhs is 1300 square feet. It is a huge area.
Okay.
Suppose
all right.
If you go for
the track record, all the studies that we've done has said that this progress of providing housing for Mumbaikars has been slow by the government authorities, and of course MHADA is the biggest of them all. I mean, if you were to just share with us, what are the current challenges? You've taken on this new role. I believe you've got a lot of vision and you are looking forward to changing the way MHADA is working and providing homes to everybody. What are the challenges you're facing, sir, today?
Immediately after I took over, the next day the code of conduct started, election started. So we can't, we have got a lot of policies we are trying to discuss. We will talk to the Chief Minister and the Cabinet Ministry also. Let's see, we have got a lot of proposals. Some proposals are pending in UD department. So we are trying to have a joint partnership with the private developers. Suppose if that this regulation 33(5), we have got a lot of proposals also where our colonies are being reconstructed, redeveloped. Then we have got transit accommodation. We have got more than 1,200 transit accommodation. We are trying to develop that transit accommodation. And a lot of people have encroached upon transit accommodation also. We are trying to evict them also. Suppose if that is possible, then we can have 2,000, 3,000 flats immediately, or 3 times more than that.
All right. Mr. Yusuf Abrani, thank you very much, sir.
This year we are giving more than 2,736 flats. This year also. So within 10 days you will get online lottery will be there. So people will get more than 2,736 flats immediately.
All right, that is very good news.
From the day it started, 71 till today, we have provided 2.5 lakhs flats to the people.
I know, sir, but there's just such a long waiting list for the affordable home category that I think you've got many years before we can fulfill that demand. But thank you very much, sir, for making the time.
City of Bombay, but in Maharashtra we are doing a lot of good work. City of Bombay is difficult.
Fair enough, sir. Thank you so much for making the time and coming here, sir. That's Yusuf Abrani, Chairman MHADA. Very, very positive, just taken over the task and is very, very clear that as much as they can do in that land-starved city, they will try and continue to provide affordable housing in the maximum city. All right, let's move on to our Q&As. And Sameer Jasuja, CEO and founder of Prop Equity, with me to take your questions. Sameer, thanks very much for joining us on the show. Let's take the first question. It is for Mumbai. Ishwari Bhatia on the phone line. Ishwari, hi, go ahead.
Hello.
Hello, we can hear you. Go ahead, Mr. Bhatia.
Yeah, I would like to know that I want to invest around 1.40 in Mumbai. Is this the right time to invest, and can you suggest me some good projects?
All right, 1.4. I mean, it's a decent budget for Mumbai, and whatever I'm hearing from the developers that we are speaking to, and we just spoke to MHADA chairman, there is no land available in Mumbai city. So prices coming down is almost an impossibility, isn't it?
Yeah, I think what has happened is that in all tier 1 cities, pricing is now totally dependent on demand and supply, you know, and wherever cities are throwing out a lot of supply, prices are correcting on their own.
Absolutely.
But Mumbai is one such city which everybody is aware of, that the demand is far outstrips the supply, especially of ready homes. And it's a good investment destination also because it's like parking your funds in a safe place where prices will rarely go down. Having said that, the super luxury segment has got affected, and the pre-launches and the launch prices of newly under construction properties have come down.
Yes. By about 15%.
The expectations are very high.
Right.
Now, those expectations can't be met in Bombay or Mumbai, but can be met in other cities.
Okay.
That's the only differentiation.
So, if you invest, well, it's a safe place to park your funds from an investment point of view. Right now is as good a time, probably
better time, because whatever discounts you will be able to avail will be now. Unless we have a very bad situation post the election where we have a hung parliament, and then anything can happen.
Then anything can
happen. So anyway, I think that while you're making your decision, you will, and you should probably wait out a month, see the election results. I don't think anything is going to move much between that 1 month. So hold on and make this decision after a month and see where it goes. In the meantime, there are 3 micro markets: Kanjur Marg, Powai and Goregaon East. The total supply in Kanjur Marg, matching your budget, is 7 projects. Powai is 5 projects, and Goregaon East is 24 projects. Total supply in Kanjur Marg is 900 units, Powai is 310 units, and Goregaon East is 4350 units. The inventory overhang with such a limited supply is also reasonably high. Kanjur Marg is 24 months, Powai is 18 months, and Goregaon East is also 24 months. Sales are actually slow. The mid to luxury segment's weighted average price for Kanjur Marg is 13,200 rupees a square foot, Powai is 15,900 rupees a square foot, and Goregaon East is 13,750 rupees a square foot. Kanjur Marg's price appreciation has been 40% over the last 2.5 years, or 16% on an annualized basis. Powai has been 43% or 17% on an annualized basis, and Goregaon East has been 38% over the last 2.5 years, translating to an annualized return of 15%. The recommendations from our side: Ranval Forest by Ranval Group, Kanjur Marg 10,750 rupees a square foot, getting ready in 2017, available with the developer. Then you have Supreme Aishwarya by Supreme Infra, Powai 15,000 rupees a square foot, 2015 is the completion year, available with the developer. And then we have Aspen Park, Divine Space, Goregaon East, 13,000 rupees a square foot, 2016 is the completion year, and this project is also available from the developer.
All right, so don't be in a hurry to go and grab a property right now. 1 month wait is not going to either raise the prices in the market or bring them down substantially. So go ahead, look at these 3 properties, decide which one you like, and probably you can make a call to the sales offices and try and negotiate a good deal and keep the cash ready. Ranval Forest by Ranval Group, the Supreme Aishwarya by Supreme Infra, and Aspen Park, Divine Space, 3 projects on our list. Next up, we've got an email from Fayaz Sharif. He writes in, he wants something in Kalamboli. I want your advice on buying a property in Mumbai. I live in Mumbai, need to buy a property for investment for the long term, 10 to 15 years. Wow, that's a really long term. I'm confused between Kalyan and Kalamboli. So really, he's tossing between Thane and Navi Mumbai as his destinations. 1 BHK, about 576 square feet at 33 lakhs lump sum. He's just shortlisted one, which is Ronak Builder. He's also shortlisted another one, Roadpally, at Kalamboli. So 2 projects have already been shortlisted. What do you think?
So we think definitely the project at Kalamboli scores over the project in Kalyan for multiple reasons. But what I'll do is I'll first come to the key data points.
Overall also it'll be interesting, Sameer, to just look at, if you have a 8 to 10 year perspective, which of these 2 markets do you think, how will they unfold? It's a long call.
Yeah, that's a very long call, but I'll come to the key data points and then go over the choices that you've made and suggest to you what is the right one to pick. Kalamboli has 45 projects and Kalyan West has 51 projects. The total supply in Kalamboli is 4,400 units and Kalyan West is 10,200 units. The inventory overhang in Kalamboli is 14 months and Kalyan West is 25 months. The weighted average price of both the markets similar. Kalamboli is a little higher, 5,600 rupees a square foot, and Kalyan West is about 5,250 rupees a square foot. On the price appreciation charts, Kalamboli has done about 24% on the price appreciation, which is 10% on an annualized basis, and Kalyan West has done about 37% or 15% on an annualized basis. The project that you've shortlisted, Ronak City, Ronak Group in Kalyan, is a good project but has 2 major limitations. One is that it is in a very remote area of Adharwadi in Kalyan West, the location being not very good and weak connectivity with the Kalyan station. The second reason is it lies very close to the municipal dump yard. These are the 2 reasons why we are suggesting that you can choose the project in Kalamboli. So we will suggest you to go ahead with Neelkant Heights, Patel Developers, Kalamboli, 5,200 rupees a square foot is the price. Project is also on ready possession, so no execution risk, available with the developer. The rental going over here is between 6,000 to 7,000 rupees a month, so you can enjoy the rental from day one also, because it's a ready possession project. That's why we feel Kalamboli scores over the project in Kalyan West. On a long-term perspective, if you were to compare Thane to Navi Mumbai, my personal preference lies with Navi Mumbai. I think it's a far more organized
and much better
city. Proximity to the Mumbai-Pune Expressway, which is going to be very high. I think the right type of corporates have shifted into Navi Mumbai. It's like the Noida versus Gurgaon.
Gurgaon story. All right, that's interesting. Let's see how it
and the futuristic airport is also supposed to come in Navi Mumbai,
and in
which
10
is similar
years,
to Gurgaon.
It will.
Yes.
At least here, the caller does have a 10-year horizon. So we are hopeful that the new airport will also be a reality in Navi Mumbai. All right, we've got Subhash Jarodia on the phone line with us. Subhash, hi. Thanks very much for calling in. Go ahead.
Good evening, Manisha ji. I am in the train, but actually my query is I am looking for a 2 BHK house in Pune for residential and investment purposes. My budget is between 50 and 60.
Okay.
I have shortlisted 2 properties. One is a Songbirds from Energia Developers at Bhugaon Village. Another is Godrej Properties, and third one the Tata Housing also.
Okay.
I am having in my mind. But I like the location of this Songbirds. So I would like to have your expert and considered advice.
All right, it's always a tough choice. You have a Tata project, you have a Godrej project, but you do like a project by a local developer much more. So what does he do?
See,
is it also priced better?
See, we've got some other recommendations.
Okay.
We think Undri is a great location to invest in, both from an investor point of view and an end use point of view. We like the Godrej project, which you had also shortlisted, and that's the email that you sent us, which was at the pre-launch stage. Now, Godrej being a very reputed developer, you will be pretty sure that the execution should happen more or less in time. So that is one project we think that you should definitely consider. And I'll come to the key data points first and come to our recommendations, which we think will also be very suitable for you. 30 projects here, 3,720 units, and 18 months is the inventory overhang. The mid segment's weighted average price is 4,450 rupees a square foot. 23% on the price appreciation charts over the last 2.5 years has been the price appreciation of Undri, roughly about 11% on an annualized basis. Godrej Prana trading at 4,800 rupees a square foot gets the go ahead from our side. 2017 is the completion year and available with the developer. It is to be launched soon, so it's at a pre-launch stage. The 2 other projects that we think are good enough are Progressive Primero by Goel Ganga Development. Is a very reputed developer over there. 4,500 rupees a square foot is the price in Undri, 2016 being the completion year and available with the developer. And then we have Springtown 2 by Bhumi Promoters and Developers in Undri. This is 4,650 rupees a square foot, 2016 being the completion year, and this project is also available with the developer.
So here's a quick summary. Undri, Pune is what we are talking about. There's Progressive Primero Goel Ganga development. That's the first project that we've added to your list of choices. And there's Springtown 2 by Bhumi promoters and developers, budget 46 to 47 lakhs. We're going to take a quick break. On the other side is South India. Why, despite a falling demand in the old Mahabalipuram road, that's OMR in Chennai, it remains a popular destination for builders. That's a special report. And also top budget options in Bangalore.